Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Coram, Carson here with a look at the action in today's session, Wednesday, September 6th, where we saw stocks fall as Treasury yields continue to pressure the market, and the Nasdaq and S&P 500 now at risk of closing below a key technical level, Ed, testing that 50-day.
Yeah, it wasn't a great action once again. Do want to take a look at a few stocks that are doing pretty well. Meta, Uber, and Shopify.
Well, let's do it. But first, let's take a look at the major indexes. The Nasdaq today down almost 1.1%. The S&P 500 down 0.7%. The Dow off 0.6%. And small caps, the Russell 2000 down 0.4%. So some pretty notable losses here, and now tests at some key levels for these indexes, Ed.
Yeah, the Nasdaq did manage to close above the 50-day line. I mean, last minute or two, getting above that line. The S&P getting below that line. I think this rally has certainly showed the importance of this 50-day line. We had that nasty reversal a couple of weeks ago. Then 3 sessions later, we had the follow-through day, and that one was right. All the major indexes came above. Now you have the Dow losing further ground versus the 50-day. The S&P is below it. The Nasdaq is testing it. Also, another note with Dow, it's less important with the Dow than the S&P and Nasdaq, but the Dow is now closed below the low of its follow-through day, which is that spike above the 50-day line. That is a bearish sign. It's probably more relevant to the S&P 500, Nasdaq, which are not below that level. But when it does that, when you see a close below the follow-through day, that's a very bearish sign for the rally, that eventually the rally will fail. Now, the rally would have to go all the way below that low that you can see, like at 13,161 for the Nasdaq rally to be over, but it would be a really bad sign if it got below there. We aren't there yet. And I don't want to get too bearish because, hey, this almost is forming a handle. You could argue this is nice. This could set up and go great. So it's just something you have to look for either scenario here. That was not good action. If we turn around, bounce, we could have, there could be a lot of neat buying opportunities in the very short term. So it's something that you have to adjust. But if we fall any further, we're going to probably start coming under pressure and might have some really negative signs. So it is a really important time to be paying attention to the market.
Totally agree. Another key crossroads for the major indexes. Bounce could be great. And as you said, setting up some buying opportunities because we like buying close to the moving averages. But on the other hand, we're pretty close to seeing some more key levels get undercut, and we definitely don't want to see that. Let's take a look at the 10-year yield because, Ed, this is what's weighing on equities.
Yeah, this is a huge factor. And look how much that's risen just the last 3 sessions. And obviously the market had rallied in part because the yield had been coming down. We're coming right back up. And all of a sudden, hey, a few days ago, we were thinking, hey, maybe we can get below the 4% level. And now it's like, hey, we could get back to a 15-year high with just one more day.
Yeah.
And, it just shows you how minor changes can shift that mindset. This just makes it more difficult. There was rising Fed rate hike fears today as there was a stronger than expected service sector index came as a real surprise. So most of the losses came in after 10 o'clock Eastern when the yield started rising after that report.
Right. Let's take a look at the energy market. Here's USO, which tracks the price of oil. And it was up 1% today. Boy, has this been on a tear, and that has lifted energy stocks. Here to look at XLE. I'm seeing a lot of blue days in a row here for both of these.
Yeah, the actual crude oil futures are up 9 straight days, and they're up 11% in that time. So a lot of things work pretty well when that happens. So all the things you can talk about, the rest of the market, this area is fairly, not immune, but it's very resistant to those pressures. As long as crude oil is going up, and even though you might see demand concerns for other commodities, supplies are being artificially limited. And so a lot of things are still working. Some of the things have been in buy range and may still be in buy range, but maybe the best chances were a few days ago.
Right.
So there may not be as many great buying opportunities, but they're definitely, this is the leading sector in the very, very short term.
Right. And let's take a look at a couple of other ETFs before we get to those 3 stocks. Here's XLI Industrials, now down 2 days in a row. Pretty notable hit on Tuesday and further falling today, Ed.
Yeah, market breadth was pretty weak again today. And again, this could bounce back, and you can imagine a lot of things looking pretty neat with a good day or two, but we're getting close to the rally lows for industrials. So yeah, something to watch.
And let's take a look at ITB. This tracks the home construction group. A little bit of a bounce today after a big slide in Tuesday's session, but an inside day and not making up too much ground.
Yeah, that's a pretty that looks like the classic dead cat bounce kind of situation right there.
Yeah.
That's not much.
Yeah, and who knows? Maybe this is just needs a little bit more time to form that base. This group has had a strong move over a couple of months, so maybe it does just need a little bit more of a rest, but we'll have to see. And now let's take a look at chips and software. Here's SMH. Looks like it's trying to go tight and sideways here for the last couple of days, trying to find support at the 50-day and 21-day line in this base pattern.
Yeah, one thing is that NVIDIA fell over 3%, and that looks fine. That stock still looks fine, but that's the biggest component in this. And for actually, the chips held up pretty well, all in all, when this is down 3%. Again, it's just key levels. Bounce from here, and you could say, "Wow, you should be buying this or buying other chips." Go down, it's like, "Well, I should be selling this." It's really that kind of situation, again and again.
Yeah. Well, hey, I mean, that's the reason why we're looking at these, right? I mean, because it could be decision time in either direction. And so we need to be prepared for that. And lastly, before we look at those stocks, here's IGV, another day of blue, barely. So managing to make a gain on a down day.
Yeah, this was, software definitely is acting pretty well. And some of the, so this is definitely an area, I don't know why it's doing so well, but it is. And so that's definitely a growth area to be watching. Probably some nice setups in that area. Look at that relative strength line hitting a new high today. So really good there.
Yeah. Is there a blue dot on the weekly? I'm not seeing one, but maybe after today, there will be.
Today, yeah.
All right. Good stuff there. Let's go to Meta, Ed. This is our stock of the day today, tightening up right around 300 and those moving averages, which have converged. So again, this is on the cusp. Will it present us with an entry or will it get rejected at this critical moving average?
The 50-day keeps on trading right there in the 300 level. There was a moment this morning when it looked like, hey, maybe it's just starting to peak out because it was at the highest level it's been in a few weeks. So you're thinking, well, maybe there's an early entry there. Came back down. I mean, held up pretty well. It's going to have a base after this week. So that would be the first base in quite a while. That would be something else. And yeah, so if it just shows any kind of power here, this is definitely one to be paying close attention to. So if the market just sort of steadies and picks up a little bit, this is definitely one to be watching pretty closely because it's one of the best performers of the year and is providing the best buying opportunity. Perhaps, it's setting up perhaps, for the first, the best one in quite a while.
One to watch for sure. Let's now go to Uber, also working on a base. Had a strong week last week, but this week it looks like maybe it just needs more time to form a handle, which would be a good development. If it can get support here and tighten up a little bit more, that could be an interesting setup too.
Yeah, sometimes it's so easy because I don't own this, and so it's so easy for me to step back. Yeah, this is acting great. Look at that; it's pulling back. It's forming a handle. This is going to be very bullish. I mean, it's a different story if you bought on in like an early entry last week, and you think, I gave up my gain, and now I'm down a little bit. What do I do? But they're both valid. It's right in there, acting very well. This is held up, much better than a lot of other travel names. Now, I know this isn't just travel, but ride hailing and food delivery. The pullback this week is on light volume. So it's acting very orderly. And both of these things, the declines have been pretty modest, and the RS lines are still holding up near highs after strong gains. And these are the kind of patterns and the kind of action you want to be looking for.
Right. And Ed, you bring up a good point because for traders who were buying last week, we did get a follow through day last week. I mean, if this week we're seeing a lot of round trips of those entries, that's just something to be keeping an eye out for the health of the market. How are your holdings doing, right, with those recent entries?
Yeah, I mean, it could be that, like the market's starting to give not red flags, maybe a little bit yellow alerts a little bit, or yellow flags. But it's not so much that you have to cut your exposure, but if your individual holdings, are round tripping gains or suffering real losses, you may want to be cutting back on that. So you have to be making decisions on individual holdings first right now, because the market is sort of not giving you signals one way or the other.
Yeah, just something to be cognizant of. Let's wrap things up with Shopify. 2 really tight days here this weekend after that nice pop above the 50-day line last week on that Amazon partnership news.
Yeah, and so you could have bought it on that gap up. It sort of went above the 50-day line. There was a trend line, you could have argued. But you could also, well, sometimes you don't want to wait for the gap up, see what happens. And it's holding up very well. Maybe it forms a handle, or maybe it just pauses for a couple of days and then moves higher. The high of that little area is sort of pretty connected to that 67 area. So there was a lot of trading sort of in that area. Yeah, this one's, and there's no volume in these last couple of days. I mean, it's just sort of like it's holding up so tightly when the market is coming back. The RS line looks fine here. It's nice to take a little breather after that big gap and a pretty big run from 51. That's a pretty big move right off the bottom. So it's always nice to just say a little breather. So this looks really healthy action, especially with the market pulling back just this week.
Thanks so much, Ed. And thanks everyone for tuning in. That's it for today. We will be back with more tomorrow morning on IBD Live. And we hope you join us, investors.com/IBD Live for all the details. We will see you there, and we'll also see you right back here tomorrow at the close.